Hey guys, my name is Jason. I'm the founder of Distress Loan Advisors. I've been giving advice on SBA loans and related matters since 2009. I've settled hundreds of SBA loans for my clients. 7A loans are the prevalent one. Lately, I've been giving a lot of advice about EIDL loans. Fun fact, they can't be settled right now, but people still want to understand what their options are. So if you're looking for advice on your EIDL, I can help with anything but a settlement, meaning I could at least try to give you advice. If you have a non-EIDL loan, specifically a 7A, those I can help you attempt to settle. So today I want to talk about the relationship between the SBA and the lender and how that whole thing works. So everybody understands that SBA guarantees the debt. Not everybody understands what that means. So the SBA guarantee means that if you default, the SBA will reimburse the lender. Typically with 7A loans, it's up to 75% plus 60 days of accrued interest. And one thing that people from time to time get confused over is that the guarantee is for the lender only. So in other words, if the SBA pays off your lender, it just means they're reimbursing them for a portion of the defaulted loan. It doesn't mean that they're actually paying off the loan on your behalf. So it's not like you had a rich uncle who said, I'm just going to pay it for you, don't worry about it. It's more like the rich uncle who says, all right, I'm going to pay the bank for you, but now you have to pay me back. So at the end of the day, it doesn't really make much of a difference in your life if the SBA has reimbursed the bank or not. That's really more back office paperwork type of stuff. You still owe the money and you still need to work it out either with your lender or the SBA. So here's a question. Well, who do you work this out with, right? Because we're talking about the relationship between the lender and the SBA. Well, who you're going to work it out with is going to depend on who is currently servicing your loan. So when you take your SBA loan, of course, your lender is the servicer. And even when the SBA reimburses the lender, a lot of times the lender will continue servicing the loan. And so in those cases, you have to continue to deal with the lender. So in other words, you can't go over your lender's head to the SBA and say, hey, I'd rather deal directly with you rather than deal with my lender. And the reason is the SBA, they're not really set up to handle day-to-day servicing actions. They're just kind of the backstop to say yes or no to things that the banks have done. And so if you're having issues with your SBA loan, unless your lender specifically tells you they've closed their file, you have to deal with them, which means you really need to play nice in the sandbox because you can't just go over their head and say, oh, my lender's being a jerk. Now, if your lender has done something, wrong, they literally will not return your phone calls, or they're, grossly misinterpreting the SBA guidelines, you certainly can try to go over their head. You can go to your congressman, you can go to your senator, and they'll make an inquiry. And so if your lender's behaving badly, that should, wake them up or at least embarrass them into doing the right thing. But beyond that, if you're just getting answers that you don't like, that generally doesn't rise to the sort of thing that the SBA is going to get involved with. If you try to call the SBA and say, I applied for a deferment and they said, no, can you help? They're likely going to tell you, sorry, you have to go back to your lender. So, what's the takeaway from that? One, be cooperative with your lender. So don't assume that you can just go and deal with the SBA if you don't like dealing with your lender. Unfortunately, that won't work. Two, you're forced to deal with your lender until the SBA tells you otherwise. There will come a point where if you can't come to terms on a settlement with your lender, the SBA is going to ask them, hey, what's going on with this loan? And we used to, when I worked for the biggest SBA lender in the country, this was circa 2009, 2008, 2009, what we would have to do is we would have to give them monthly or quarterly updates and say, Jason's Pizzeria, we've agreed to, monthly repayments while he tries to sell it or, something like that. And so after a certain period of time, the SBA is just going to say, okay, it's been a long enough time, we're going to pull it. So sometimes they'll actually pull the file. It doesn't happen a ton, especially these days because the SBA is so overwhelmed. But all this is to say is your lender is the one driving the bus until they decide that they've done everything they can to collect. And then at that point, they will refer it over to the SBA. So if you've done any reading on the internet or on my website, you may have come across this 60-day letter thing. And what that is when your lender closes their file and transfers the servicing over to the SBA, they will send it a 60-day letter. And as the name hints at, they give you 60 days to get in contact with them, work out a payment plan, work out a settlement, stuff like that. Now, here's a word of warning that no one ever listens to, but I'm going to put it out there anyway. The second you get that 60-day letter, you want to contact them and you want to get something submitted, especially if you're looking for an offer in compromise. Because I've had people who wait to the very last minute, and then to their shock and dismay, the file gets referred to the Treasury because they waited too long. The process from which the SBA sends the loans over to the Treasury is generally automated. So at day 60, it just goes. So they generally will say, we'll get it in at least a week before, or that's what they used to say. But honestly, I think, the day you get the letter, within a couple of weeks, you should get something submitted. And there's actually two big benefits to submitting an offer well in advance of the 60 days. One, you're not flirting with that line, because once it goes to Treasury, it's really hard to convince anyone at the SBA to pull it back. Basically, you had 2 months and you sat on it, so they don't have a lot of sympathy. Two, the other reason that you really want to get something submitted early for one of those 60-day letters is that if you submit it and they give you an answer prior to that 60 days elapsing and they decline it, you actually could have an opportunity to resubmit another offer before it goes to Treasury, which could be huge, because if you submit your offer, say a week or two before the 60 days are up, it will still go to Treasury, but they'll typically give you the benefit of the doubt and they'll look at it. But the problem is if they decline it, it stays at Treasury, no more opportunities to settle with the SBA. So you're really playing with fire as far as that goes. So that's the servicing. That's the relationship between the SBA and the lender. That's the 60-day. After the 60 days, it goes to Treasury, and once stuff goes to Treasury, like 90% of the time, 95% of the time, it does not settle. So you really, if you have any intention of settling, it's got to be either with your lender or with the SBA. Generally, it's better to work with your lender, provided they're not being jerks, because they'll actually allow for payment plans if your situation makes sense to do a payment plan. Whereas once it gets referred to the SBA, they're not going to do a payment plan unless you agree to pay it in full. And the reason, as they explained it to me, was once it gets to SBA, it's been charged off. And it's an accounting term where basically they deem it uncollectible. But as a result of that charge-off designation, the SBA will not entertain monthly payments. It's got to be a lump sum. So that's it. We're approaching 10 minutes here, 8.5. So I think I've said enough about the relationship between the SBA and the lender and the 60-day letter and the Treasury. So hopefully you get it. If you have questions, feel free to comment below. Otherwise, I do offer a 30-minute case evaluation if you have questions. If you have EIDL questions, I actually have an audio course, a premium audio course. It's about 90 minutes. It answers over 20 questions, 20 of the most common questions. If you have an EIDL question that is not common, you can also schedule a case evaluation for 30 minutes. And if you have a regular SBA loan and you're looking to settle, that's in my wheelhouse. So that's it. Thank you for checking in. Thank you for everyone that's been subscribing. I've never had any social media before. So I know to a lot of people, I think I was at like 725 this morning. I know to like big influencers, that's not much, but I feel like this is a pretty engaged group, and I'm getting a lot of comments and a lot of emails and stuff. So I appreciate the support, and hopefully the information I'm putting out here helps. All right, we'll see you next time.